All right, everyone, a very good evening. Very good evening. I hope you're all fine and doing well. Welcome on behalf of NCM Global, NORCM Academy, and NCM Institute. I am today's presenter. My name is Mahsin Khan, and I'm the head of learning and education. And today, my core responsibility is to make sure that you get your time's worth. Time is more valuable than money. I'm sure wherever we are participating, most of our audience is from the Middle East, from GCC. Spending money to buy anybody a meal is not a big deal. But if anybody asked you to spend 24 hours with them, this is something that everybody would reconsider. So time is more valuable than money. We can get more money, but we can't get more time. I know it's we're entering the night. It's late evening. People are coming from work. Everyone's tired, but I'll make sure that you get something of value, that when we finish the webinar, you're really going to say that you really learned something. Okay. Now, I always say this in my webinars. There are two ways to do today's presentation. The first way is the formal way, the official way. I can finish the slides. It will take only 20 minutes. And then everybody's done. You can go back to your daily life. You can enjoy time with your friends and family, whatever you plan to do. In Kuwait, I'm right now in Kuwait. Thursday is a weekend for us. But the other way, if you really want to learn something, if you really want me to go in depth, I won't use any difficult words, no technical words to show off my experience in this industry. This would take 40 minutes or maybe more. So let me know in the chat box, what's the method you want me to use with you? Shall we go fully officially finish everything, the webinar in 20 minutes, or you want me to take time and tell you everything step by step? We do some practicals. The first 10-15 minutes of the presentation, then it will be boring. It will be theoretical in the beginning. Then we will enter into the technicals. Great. Mr. Charles want me to take time. Mr. Murali as well. Mr. Rajat, Amir, thank you. Great. So let's get started. Before I introduce the company and anything else, online trading is just like any other business. Financial trading online is a proper business. It's an online business. When you want to start an online business, $50,000 is an amount that if you have access to, you can start a business anywhere in the world. You can start the business in Asian territory, Arabian territory, or even a Western country. $50,000 does help you get a decent small franchise as well. But it is still risky. Even if you had access to $50,000, what was the effort behind that $50,000? That also matters. How many jobs you did, how many businesses you did, how much years it took you to save that $50,000. So once he has to plan to start a business, look at the headaches or stress that are associated with it. You need a location, you need utility bills, there are some licenses, there are approvals, you have to go up, down, left, right, that window, get this stamped. If you're doing a professional, if you're starting a professional company, you might need a professional recruitment as well. You might need recruitment consultants. So that's an issue. Now, when it comes to online trading, your laptop, your smartphone, your tablet, this is your shop, this is your showroom, this is your company. All right. So we're going to get started. First of today's subject is efficient day trading strategies for crypto trading CFDs. It's part one. We host part one always online. And if you become a customer, if you become a client, then we even provide one-to-one sessions as well. If you are attending today's webinar, there are also some gift hampers. Don't forget that. What you have to do is visit our office in Dubai, and you can ask for a gift hamper as well. Okay, there are some gifts waiting for you. And if you stay until the end of this webinar, I'm going to give you some additional bonus tips or maybe an additional strategy that would be easy for you. Even if you're a working person, you have a busy lifestyle, you can even incorporate in your practices. Okay, so let's get started. Let's begin. The topics for today: what we're going to discuss first are the introductory topics. We're going to talk about what are the types of international financial markets, what financial markets exactly are, what is a regulated broker, what are the differences between regulated and non-regulated broker, what are cryptocurrencies, CFDs, and what are their advantages, and we're going to give you a sample trading strategy. I'm going to answer all the questions like I promised, but in the mid of the presentation, I might just keep them on pause, so don't worry. Okay, a disclaimer, a quick disclaimer. Take your time to read this. Please understand, like any other business, financial trading is also risky. Do not invest money that you cannot afford to lose. Do not invest your car payments, mortgage payments, your children's education fees. If you have elderly parents, do not invest their medications and treatment fees as well. You have to analyze, you have to talk to a certified or licensed financial consultant before you take any risk. So take your time and no rush. If you can't risk, if you don't have the funds available at the moment as well to risk as well, it's totally fine. Just get the knowledge, grab the right knowledge from the right place, grab the right skills. We do offer practice accounts or demo accounts in which the markets are real, but the money is fake. And the strategy or technique that you're going to learn in today's webinar, you can even practice that as well until you have a solid grip. All right. Now, just a bit off topic, how life is like stairs. These are steps. You go from school, you go to high school, then you go to university graduate, right? Similarly, you can also apply this in your corporate life. A person can be an employee, then a person can be self-employed and a business person as well. Financial markets are part-time businesses. Online trading is part-time business. Okay. Now, if you see on the internet, most of the time people are sitting with 3 to 4 screens. There's an expensive $5,000 computer. Multiple screens are being watched in the exchanges. It's not how things work. The method, the techniques that you're going to learn from us today, they are stress-free. They hardly require 5 hours a week. 5 hours a week. So you can even have a day job. My request for people, please do not draw on the slides. So you can even have a day job. And by learning online trading, you can also become a self-employed person and create a separate or additional source of revenue for yourself. After the COVID-19 crisis, people did realize there should be alternative sources of income. And I'm going to teach you one of those methods today. Okay, so let's get started. There are different kind of financial markets. The first market is called the Forex market. Forex market is called foreign exchange. It is a market, it is a place where the globally leading or well-known currencies are traded. The second type of financial markets are called the energy markets. They are also categorized into commodity markets. In energy markets, you have the US oil, you've got UK oil or Brent oil, and sometimes there is also natural gas heating oil available as well. Then there is precious metals market. Precious metals market is also part of the commodities market. We have gold, silver, platinum, palladium, copper, etc. These are the things that are traded in the precious metals. We've got the index markets. I'm reading these fast because our subject today is in regards to cryptocurrencies. So I'm just giving a brief definition. Index markets, the famous ones are Dow Jones 30 leading industrial companies are listed together, combined in one form. Then you've got the NASDAQ, which is very famous, very fast moving. It is a composition of 100 multi-million billion-dollar tech companies. And then we've got S&P 500, which is an index of 500 large capital companies in the United States, which have a heavy weight on the economy of the country. Equity markets are the share markets. There's a missing market as well, the agricultural markets, in which you have sugar, cocoa, coffee traded as well. Sometimes there's wheat, cotton, and rice as well. Last one that we are going to discuss today is the cryptocurrency markets. Now, this is not a computer science class, so we are not going to go into the technicals or mechanics of the cryptocurrencies, what they are precisely, from tech perspective, how they are made. We'll just keep things simple so we can go to the trading strategy to learn. Okay, now, but let's know a bit before you start trading, before you enter into the world of investments, before you start your investment career, always make sure that the entity or the brokerage that you're trading with, it should be a licensed entity, and it should be regulated by as well. Regulator in the country is a government entity that audits the financial services providers to ensure that everything is being done fairly and everyone's kept safe. Let's read the official definition. Role of a regulated broker. Trading with a regulated broker protects your hard-earned money. They operate under strict rules, ensuring your funds are segregated and you're less likely to be scammed by a fake platform. How you can identify if a broker is regulated or not? What you have to do is always go onto the main website of the broker. You go on their websites. For example, NCM Financials is our subsidiary or entity in UAE. You should always see the About Us section or roll down at the footer where you can see the company information. They should have their business license as well, and they should mention who is their regulator. For example, NCM Financials is the first company here. It is regulated by United Arab Emirates Securities and Commodities Authority, ESCA, under Category 1 license. And this is the license number. Okay. We have approximately 5 offices globally, and each of our offices are regulated. In Kuwait, we are known by NCM Investment, and we are regulated by the Capitals Market Authority of Kuwait. In Turkey, Jordan, and Malaysia, Labuan, we are also regulated. So this is the way to find out if the company is regulated or no. Additional tip, I will give you an idea. The regulator, it always forces a brokerage company to have segregated accounts. What is the meaning of segregated accounts? Like, this is a company. The company should have 2 bank accounts. 2 bank accounts. The first bank account, this one belongs to the company for their own expenses, like salaries, utility bills, etc. The other segregated account is for client funds. This way, the client funds are protected. God forbid, if something negative was to happen, the client funds are always safe. This is the advantage of working with a regulated broker. So I hope this is clear. Okay, let's go back to our presentation. This is the NCM group. And if you want to receive gift hampers, what you have to do is visit our office. Let me share our address as well. We have a physical office with customer service, sales team, and the management team available on the floor. So this is the address. Are you all hearing any background noise? My apologies if you're having a background noise. We've got a National Day celebration going on. All right, so here. We are located in Al Mazaya Shopping Center, Sheikh Zayed Road, and this is the number. You can contact on this number and just give them the reference of today's webinar to receive your gifts. All right. Let's go back. Okay. So difference between a regulated and non-regulated broker. Regulated brokers follow government rules. This means your funds are usually held securely, and if there is a dispute resolution process, if something goes wrong. So if you have any complaint, you have any issue, as long as the broker is regulated, they're always going to be open to sort your matters out. Unregulated brokers have no such oversight, putting your money and fair treatment at risk. If you trade with a broker that is not regulated at all, your funds are not safe. Even there's a high chance of manipulation of your trading orders to be abused. Yeah, so always trade with a regulated broker. So what is the cryptocurrency? It's a currency. What is it? The actual definition of currency is it's a medium of exchange. If you're living in UAE, you already know that the people have been buying luxury cars, real estate properties using Bitcoins. The famous and leading cryptocurrencies are Bitcoin, Ethereum, Litecoin, Ripple. These are the famous, and BNB as well. There are many famous and leading cryptocurrencies. So let's read these 5 points. Cryptocurrencies are digital or virtual currencies that exist only online and are secured by cryptography. There are no physical cryptocurrencies in any way. They are decentralized, meaning there's no government or bank controls them. They are purely, they move on supply and demand. Bitcoin, Ethereum, and Ripple are some of the popular cryptocurrencies. Transactions are recorded on a blockchain and a public secure digital ledger. We don't really have to know in today's webinar what a blockchain exactly is, what a public and secure digital ledger is as well. People use cryptocurrencies for payments, trading, and investment. Our focus is more on the trading side. What are crypto CFDs? Crypto CFDs are contracts for differences that allow traders to speculate on the price of cryptocurrencies without owning them. All right, the method and techniques that you're going to learn today, they are also universally applicable on forex pairs, precious metals, oils, indices as well. So the method I'm going to teach you, you can use it on cryptocurrencies and you can use on other things. So instead of buying actual Bitcoin or Ethereum, traders open a contract with a broker, which is a trading position. You don't own the cryptocurrency by itself, but if you open a trading position, if it's successful, you make a profit, the brokerage owes you that profit. If you make a loss, then you owe that loss to the broker. Profit or loss is based on the difference in price from the time of opening to closing the trade. This opening of position can be a long or short. In spot trading, you can only buy the spot market, and this is called long entry. And if you have a long entry, you bought a position, you can you'll make money only if it goes up, but if it goes against you, you can't do anything, you can't hedge. Short selling, briefly, it's opposite of buy. In short selling, you make money when the prices of the asset, they go down, and if they go up, you lose. It's an opposite of buy. Crypto CFDs can be traded with leverage, meaning traders can control larger position with small deposits. They are commonly traded on platforms like MT5. Is CFD the same as perpetual futures? Yes, approximately. Approximately, it is same. Okay. In perpetual futures, it depends. Does it have an expiration or no? But perpetual futures are often considered as spot futures, where there's no there's a rollover. Thank you. All right. What are the advantages of trading crypto CFDs? All right, let me tell you something. If you're already having a trading experience and if you traded forex pairs like euro dollar or pound dollar or dollar Canadian, what you have noticed maybe that every day's movement is around 70 to 90 pips on average. If you're trading gold or oil, you can see daily movement is around 100 to 200 or 300 pips. If you're a NASDAQ trader, you've seen 150 to 300 pips movement on daily basis, right? But in cryptocurrencies, things move quite fast. They're moving quite fast. You can have a 100 to 2000 pips move within matter of seconds or minutes. Okay. You can use leverage. We are offering leverage of 1 to 2. You don't need any physical wallet or an online wallet. No need to store or manage actual cryptocurrencies. We allow short selling, that if the market is going down, you want to profit from the fall, you can take short positions on cryptocurrencies. Traders can profit from both rising and falling markets. Many CFD are regulated, provided more security than some crypto exchanges. You've seen and heard recently that many cryptocurrency exchanges, they're well-known, leading exchanges, but they always get hacked for 1.5, $1.4 billion, couple of hundred millions of dollars. So when you trade with a CFD regulated broker, you don't have this kind of risk associated there. Fast execution, immediately quick trades are filled. In exchanges, when it comes to trading with crypto exchanges, you can see sometimes you get a partial fill as well, or sometimes no fill. So that's something really good. If you're someone who's looking for scalping and short-term trading, it's good to go for crypto CFD. And of course, we would prefer our own firm because we have ideal terms and conditions to trade the cryptocurrency. So this is just a basic small formal introduction what cryptocurrencies are, what are the advantages of trading cryptocurrencies, CFDs, and any questions so far. I'm done now from the theoretical part. Now we are going to go for the main course. We're going to serve the meat and potatoes. We're going to go to the practical strategy. Make sure you even have our trading platform. You can go to our website, ncmfinancials.com, and on the top, you can see here is an option to download MT5. You can download an MT5 here. This session is being recorded and it will be on our YouTube channel on Noor CM Academy. You can watch it there as well in the coming week. Going back to our presentation. So any questions? Any questions so far? If you have any question for things we have covered until now, you can raise your hand if you want to come on the microphone, or if you want to ask by typing, that's also fine. I'm going to count till 5 and then we will move further. Then we'll take more questions at the end of session. 1, 2, 3, 4, and 5. Let's move to the next slide. All right, now there are different kind of trading strategies, and there are even different kind of trading styles. You've got now, if you want to write it down, just write it down. Just write it down. First kind of trading style is called scalping. Scalping is a type of a trading style in which the traders, in less than 10 minutes, from few seconds till 10 minutes, they enter and exit their trading positions. And day trading is a type of trading style in which the traders finalize their trading position in the span of 24 hours or less. Then you've got swing trading. Swing trading is type of trading in which the traders hold their position from couple of days to couple of weeks. Then you have position trading. In position trading, the traders hold their positions from couple of weeks to months, even till a year. Okay, these are the type of trading styles. What we're going to learn today is a hybrid of all these styles. What are the types of trading strategies? There are 4 types of trading strategies. The first type of trading strategy is a manual trading strategy in which you depend on the price action. This requires the knowledge of candlesticks, Japanese candles, price structures, price channels such as bull channel, bear channel. All right. Second type of strategies are called mechanical trading strategies. Mechanical trading strategy, our course, our session today is based on the mechanical trading strategy. What is a mechanical trading strategy? A mechanical trading strategy is a type of trading strategy in which a trader depends on technical indicators for entries and exits. Okay, is everything clear? Do you want me to repeat it? Do you understand the definition? Great. All right, thank you. Thanks for confirming. The next type of trading strategy is the automated trading strategy in which traders use bots for executing trades. The fourth is institutional trading strategies such as price action, smart money concepts, Wyckoff theory, Elliott wave, etc. Our focus is going to be on mechanical trading using indicators. Now I'm going to give you a definition of technical indicator. First is the difficult definition. The first definition of technical indicator is it is a visual display of a mathematical formula. This is the difficult definition. Easy definition. Now let's go for the easy definition. It is a visual display of a mathematical formula. This is the difficult definition. The easy definition is technical indicators are built-in tools within the trading platform. They are built-in tools within the trading platform that help traders in simplifying their trading analysis. The technical indicators can tell if the market is in upward direction or a downward direction, and the technical indicators can be used for entries and exits. Maybe I was speaking too fast. Sometimes I do get excited. So you can always ask me to repeat or slow down. So do you understand the definition of technical indicators? Is it clear? Great. Great. Thank you, everyone. Thanks, Mr. Ben, Mr. Mohammed, Mr. Murali. Great. Great. Okay. Let's start. Strategy 1. Now, this trading strategy, it can be used on mobile phone, or it can also be used on MetaTrader 5 on desktop as well. These are the requirements. These are the requirements. Okay. We need technical indicators. I'm going to open the trading platform. I will show you how to set up the chart, and I'll show you how to even set up the colors, and we will do all of these steps. So don't worry. If you want to take a screenshot, take a screenshot. You need these technical indicators. You need a 20 moving average, 25, 30, 35, 40, 45, and 50. Also 55. Yes, the recording will be on our YouTube channel, or you can ask your salesperson. You can contact your account manager. The person who invited you to this webinar, just contact them to give you the copy of this recording. So these are the needed indicators. Okay. You need 1, 2, 3, 4, 5, 6, 7, 8, and 9. Okay. So there are 2 ways to make entries. I'm going to show you all of these 2 ways. And here is an important note. There is an important note. Okay. There is something called an entry chart, and there's something called an anchor chart. Okay. Entry chart is where you will take the entry. You will use the technique to take an entry. Anchor chart, entry charts are fast charts. This can be a 1-minute chart or a 5-minute chart or even a 3-minute chart. Okay. Anchor chart is a larger time frame. Minimum can be a 15-minute chart or a 1-hour chart. Choose one. Anchor chart is used to identify the direction of the markets. Okay, to understand the market structure, how is the market behaving? Is it sideways? It's going up? It's going down? That's what's the purpose of anchor chart. All right. So I'm going to share my screen. First, let us set up the chart. Let us set up the chart. Just imagine if you have your chart. Once you install the MetaTrader 5, this is how you'd see the chart is looking like. Okay. You can follow these instructions even by using the recorded video. You can pause and you can do the settings. These boxes that you're seeing on the chart, they are called grid lines. If I do Control G, the lines disappear. The lines disappear. Okay. So Control G, the lines disappear. Okay. Now, there are some additional indicators, like you've got this yellow line and you've got something here on the bottom. These are also indicators. Just get rid of everything. Control I. You do Control I, right click on the chart, go to indicator list and delete everything. Delete everything. Okay. Now you change the color. Make sure from the top, there are 3 kinds of charts: bar chart, candlesticks, line chart. You need a candlestick chart. So I'm indirectly teaching you even how to use the trading platform. You can zoom in and you can zoom out. Okay. Here is the time frame bar. You can switch to a 1-minute chart, 5-minute chart, 15-minute chart, 30 minutes, 1 hour, 4-hour daily chart. each candle, it just represents how the prices have moved during that span of time. So if I'm on a daily chart, it shows me in 24 hours, this was a negative move. Once we color them properly, right click, go to properties. Okay. And here, you just change the colors like this. Green, make the bear candle red. Volumes, make it none. Okay. And bar down, change it to red as well. You can take a screenshot. I'll give you a few seconds to take a screenshot as well. Just take a screenshot and hit the OK button. So your chart will become clean and it will look like this. Okay. Any questions so far? Okay. Now we are going to add indicators. Please show again. No problem. No problem. No, we do not use TradingView, Mr. Mubarak. We are using the MetaTrader 5 trading platform from NCM Financials. So TradingView is not part of our subject today. All right. Mr. Sayed, you can take the screenshot. Great. Okay. Now, red candle or red color means the sellers are in control. Sellers are also called bears. They are the people who move the markets towards the downward direction. Green candle means the buyers are in control. The fuel that market needs to go and push towards the upward direction is fresh injection of cash. When people start putting money, when people are greedy, they want to earn, they think the economy is doing good. When the presidents, prime ministers, the economists are saying good stuff about the country, the things start pushing towards the upward direction. When there is fear in the market, when people are not confident, when there are bad stuff happening around globally or locally, red candles start to fall and the markets start bleeding, they start depreciating. So I'm giving a quick express overview what the candles actually mean. If I go to a 1 hour chart, it shows me that during this hour or during the previous hour, how the prices were performing. Green candle means prices going up, red candles mean prices going down. If red candles are bigger, they are larger, their quantity is more, it means the prices are bearish, they're going towards the downward direction. If the green candles are more, their lengths are higher, their sizes are big, their quantity is more, it means the prices are bullish, market is trying to go towards the upward direction. Okay, now let's add some indicators. Let's add some indicators. You have to repeat this step a couple of times. When you install the MetaTrader 5 trading platform, this is how it would look. This is how it would look. This here is your charting area. This whole thing here, this is the charting area. Here is the charts. Okay. This here is called the market watch. What is a market watch? It is an area which has the list of all the trading products that are offered by NCM Financials, Forex pairs, oil, etc. If you cannot see anything, something's missing from this list. When I scroll down or up, I see it's limited. So right click and show all. It will show all the trading products, including equity, CFDs, everything here. Okay. Now here, this is called the market watch, and this is called the navigator. Control N, navigator. Navigator is an area where you can switch back and forth between your demo account or a real account. Okay, that's what it is. This is what a navigator is, and it has a section to add technical indicators. I will show you that as well. The last part here is called the toolbox or a trading terminal. Toolbox or terminal. Whenever you take a buy position or a sell position, it was always going to show in this section, in the trade section, and when you close your trades, it's going to show you in the history section. So we are not going to do the MetaTrader 5 tutorial today. We'll do it in our office. It's going to be covered in the part 2 of the webinar. Once you become our active customers, you can request for that class. And we even sometimes host workshops. So that's for another day. So now, this is Market Watch with an M. This is Navigator with an N. This is Toolbox with a T. If I do Control M, N, and T, they will all disappear. Control M, Control N, and Control T. They have all gone. Now, if I click here, if I click on this, the shortcut for this is Alt-R. Alt-R. All the charts will be aligned perfectly. They will be all tiled. But our concern is the Bitcoin chart. We can even take Ethereum. We are on Ethereum. So we figured this chart out, right? Now let's add the indicators. Control N. Go to Control N. Expand this a bit. When you go here, go to the trend section. Trend section. Start adding moving averages one by one. You need 9 moving averages. You drag here, you write 20, hit the OK button. Then you add again, you write here 25. You write here 25. Select these colors in series. Okay, you add 25. Keep the thickness to level 1. Hit the OK button. Again, now add moving average 30. Okay. Drag and drop 35. Hit. Again. 40. Okay. We do this again. 45. Don't worry, I'm going to tell you what these magic lines are. Is it 45 or 50? It's what it was supposed to be. If I double click, I made a mistake. I can double click on them and I can fix it. Okay. So we've got a 45, 2 more times. 2 more times. We're going to go for 50. Yeah, make sure all these moving averages are exponential. Apply to close. These are the settings. Okay. Let's go back. Now we want to add a 50. And last one. I'm going to color the last one as red. Moving average, 55. Increase the thickness to 2. Now you can see here, we have a kind of a ribbon here. We have a ribbon. Now, so that you don't repeat the steps in the future, right click, go to templates, save this template. Save this template. Maybe you can call it ribbons. Ribbons trading. Now, what's the advantage of this? Now, if I open an Ethereum chart or a Bitcoin chart, I want to fix this. I just right click here, go to templates and click on ribbons trading. It will fix the chart for me. Is it clear? I'll tell you how to use these. I'll explain everything. Everyone, are you confused or is it clear? If you're confused about the steps, don't worry. You will get the recording and you can repeat these steps later on. Great. No problem. Even if it's not clear, you have any questions. By the way, any questions that are coming in your mind, just write them down, either on a piece of paper or in the chat box. At the end of session, we will talk about them. You can ask me on the mic as well. I don't mind any questions. I love questions, okay? If you are having questions, it means there's a problem that has to be solved and it has to be addressed. My chart is not moving to the left, right with mouse. No problem. We can fix that later on. You have to click here. See these options on the top? Just try to click on these options. Your problem will be solved. Okay. Yalla, let's move further. Let's go back to the PowerPoint. So we've learned how to set up the chart. Please practice on demo only. Practice until you gain some confidence. First method for a buy setup. Simple method, an easy method. When you see the yellow line crossing above the red line, this is a buy setup. And here is an example here. Thank you, Mr. Mohammed Rafiq. Thank you so much. I have a university teaching experience as well. All right. So here, this is the first example for buying. Okay. Now some tips. Some tips. If the candles, the prices are above these bands, it means the market is in upward direction. No specialized analysis is needed to understand this. If the prices are below the band, it means the market is in a downward trend. Market is bearish. The sellers are strong. This is what these bands indicate. It's a bunch of different moving averages meshed and combined together. Okay. Now I'm giving you an idea. What is this moving average or this indicator used for? These indicators are used for, first of all, identifying if the markets are in upward direction or downward direction. Now, you know, once you open the chart, if prices are hovering above the moving averages, you're in an uptrend. If they are below the moving averages, you are in a downtrend. So first thing, you have learned how to identify the trend. Now, how to take a buy trade. How to take a buy trade. When you see moving averages crossing, you can see this is point of intersection, the place where the moving averages intersect, join together. When the moving averages are combining or cutting each other, this is an indication that there is a shift in trend that is going to happen, or markets are trying to shift the trend. You can see here the market, the yellow color was trying to cross above the red line to go in upward direction. It failed, but it is giving an indication that it's trying to reverse. Here it tried. Here it tried. It's trying. Later on, it succeeded. And you see the prices started to move towards the upward direction. This is called a basic buy cross or moving average crossover. Okay. When the 20 moving average cuts above the 55 moving average, that let it cut and make some distance, make some space. You can use the green candles to take a buy entry and you will hold this. When you will exit, when are you going to exit? At the opposite cross. So yellow line above the red is buy cross, and yellow line below the red line is an exit cross or a cross to enter a short sell trade. I'm just using here 15 minutes chart as an example. Okay, so everyone, do we know how to enter a buy trade using this method? Is it clear? Sure. Let me try. I can't zoom it right now, but we will zoom in on the chart when we go to the actual chart. I'll do it there for you, okay? Clear. Okay. Now, this is a example of buy. Now, let's go for example of short sell. This is your short selling example. Okay. You know, if the prices are above the moving average, it means we are in an uptrend. If we are above these, if we are up above the moving averages, it means we're in an uptrend. Now you can see later that there is a sell cross, yellow line crossing below the red line. This is an entry to short sell, to go short. And you will hold this short when you see the opposite cross or when the lines start to converge, merge, mesh, and blend together. Easy? Everyone, is this easy? This is the easy way of trading with these moving average cross bands. Great. Just for example, Mr. Murali, 15 minutes time frame is used mainly to just look for direction. It can be used for entry as well. How long do you typically wait for confirmation after the crossover? I'll show you that. We'll talk about this. We'll talk about it. It's coming. It's coming next. Let's talk about so far. Do you understand the purpose of these moving averages, this combination, and how it helps you in identifying the trend and how to use them for buy and sell entry and how to use them for entry exit as well? Clear? Now I'm going to give you something difficult, okay? I'm going to give you something difficult. Everyone, please focus. At the end of session, if you stay till the end of session, I'm going to give you an easy method as well. Much more easier than this one. Okay. Now I'm going to make things difficult for you. Okay. Imagine with me. You see this moving, let me get a drawing tool. See, assuming this is a moving average crossover, just example. This is an example. This is a buy cross. This is a buy cross. Okay. This is a buy cross. Assume this is the upper jaw. This is the upper jaw of a crocodile, and this is the lower jaw of a crocodile. This is the upper lip. This is the upper lip, and this is the lower lip. When the yellow line crosses above the red line, to make it easy, it means the crocodile is hungry, the alligator is hungry, it's ready to eat. The space, this space that you see between the moving average, okay, this is also called decision cloud. The gap between the first and last moving average, this is also called a decision cloud. Let me see if I can make it smaller. Yeah. These gaps, these are also called decision clouds or decision zones. All right. These are also called decision zones. Now, focus, because this one is a money maker as well. Okay. Now I want you to all focus. When the price is up, it comes in the mouth of the alligator. It comes in the mouth of alligator, and it then comes out of the mouth of alligator. There will be a green candle here. This is a setup to buy. This is a setup to buy. This is for trend trading. This is for trend trading. I'm going to show you from this picture. We're going to move next. Here, we have a cross. Can you see here with me? The price went up. It came down. Then a green candle closed above the upper lip of the alligator. This is a buy. Again, the market went up. It comes back inside the trading decision cloud, trading decision zone. A green candle closes above. This is a buy. It comes down, goes above. This is a buy. Here, goes down. This is a buy. Is it clear? This is called buying pullbacks. This is called trend trading. You can always use the previous lows. You can always use the previous lows. You know, you can use the previous lows for stop losses. You can always use the previous lows for stop losses. Okay. All right. Mr. Murali, what part you want me to repeat? Will it work for all time frames? Like if you see 15 minutes yellow line, it's possible to see this? Yes. Yes, it will. But if you want to do day trading or scalping, use the 1 minute or 5 minute chart. If you want to do a little bit longer term trading, use a 15 minutes chart or above. Sure, sure. I'll repeat it. I'll repeat it. You see the moving averages when they make a crossover. Okay, they made a cross. Done. Cross is made. The price is above, right? let the price come between those moving averages and then close above. Pull back, and the price needs to go above the upper moving average. Then if you see a green candle, you'll take a buy. That's what I'm saying here. You have a crossover, price goes up, it comes down between those two moving averages, then it closes above. This is your entry to buy. Then when the price goes up, it comes back inside this moving average. It comes inside this net of moving averages. And if you see a green candle closing above this layer of moving averages, it's an opportunity to buy. Okay. Is it clear? Great, great. Good to know. So this is a complex way of entering the pullbacks. You have a basic way, which is just a general crossover where you could take a trade, and then you have a buy setup, shorts setup, then you have pullbacks as well. This is for short selling. In short selling, what you need the price to go down. It needs to come back in this net and a red candle. For buying, you need green candle, but for short selling, yellow line needs to cross below the red, and the red candle that comes into the decision cloud or a trading zone, it closes below it, you take a short sell. Then it comes below, closes below it, you take a short sell. It comes down, you take a short sell. Clear? So even if you missed a trade, if you missed a breakout, you can always re-enter using this method. Cool. Cool. You know, when people come into the trading career, they explore different things, different methods, different techniques over the internet, YouTube. But tell me something. Have you ever seen this kind of method explained in this way before, ever on the social media channels, etc.? Just do share your feedback. Okay. This is the, now let me tell you something. Now I want you to write this down. Okay. Thanks, Mr. Gupta. Thanks for confirming. How to decide when to close the trade? You can use the opposite cross. You can use the opposite crossover like this. Here. This was your buy. You can exit that buy here and go short. Opposite cross. Simple. Okay, please write this down. Write this down. This is the tip for those who stay till the end. I'm going to give you some tips and I'll show you an easy bonus trading strategy as well. Okay. The approximate average movement of Bitcoin is 1,000 to 3,000 points. The approximate daily movement of Bitcoin is 1,000 to 3,000 points. The smallest lot that you can trade is 0.01 lot size, which is less risky. So when you start practicing on a demo account, start with a 0.01 lot size. This is called 1 micro lot. Another important thing is the best stop loss on Bitcoin is of 1,500 points, 1,500 pips. That's the best, $1,500 stop loss, which would be, I think, $15. This is the best minimum stop loss, and take profit should be $30 and above. Let me now explain you in the next upcoming slide. You see, if you put a stop loss of, let's suppose, $10, okay, and $10 take profit. If you're using a $1,000, let's say 1,000 point stop loss, 1,000 point take profit on Bitcoin, you need 51% success ratio. But if you put a 1,000 point stop loss and 2,000 point take profit, you need success ratio of 34% only, which means even out of 1,000 trades, if you want to become 100 trades, you want to become profitable, 66 were losers and only 34 were winners, you would still be profitable. But if you are using a 1 to 3 risk reward ratio, which means if you're using a $10 stop loss and $30 take profit, you only need 26 winning trades to be successful, again, please take a screenshot. Try to take a printout of this screenshot and stick it on your trading table in your bedroom where you have a trading corner to always know this. If your take profit sizes are bigger, even if you have bad trading edge, if you have a good trading strategy, good trading method, and decent practice, overall, the result you're going to be a winner only if you learn how to build a grip on 1-2 or 1-3 risk to reward ratio. Most traders, most YouTubers, most authors, most gurus, most trainers, they always say never risk more than 2% of your trading account. I say forget 2%, forget 1%. Do not count, because if you take 0.5% risk, it means you can trade 200 times. If you're taking 2% risk, you can only trade 50 times. What's the use? Yes, if you take 0.5% risk per trade, you have 200 limit of 200 trades, but at least it will be sustainable and you'll stay in the game in the long run. Okay. So that's it for now. That's it for now. We'll have advanced training session coming soon. I'll give you a bonus trading strategy for those who stayed until the end of today's presentation. All right. So advanced training sessions are coming soon. Clients with funded and live training account are eligible to apply. Please contact our customer service via live chat on ncmfinancials.com. If you have any questions about this training, you can even contact the person who introduced you to today's webinar, or you can even send email to training@noorsiamacademy.com. We've got our telephone number for Dubai office +971-459-52888. So that's it. Let me just hear your feedback and comments. If you have any questions, then I'll give you a bonus technique, the most easiest trading technique. Okay. Please repeat again point details. Mr. Barak, is the point details clear? Okay. Again, I'm going to repeat this again. All right. Is my voice clear now? Most often the gurus, the trainers, instructors say take 2% risk minimum. 2% risk means 50 trades. I say go for 0.5% risk minimum, because 0.5% means 200 trades. But I'm not a licensed or certified financial advisor or registered trading trainer. So whatever I'm sharing, what am I saying, it's all my personal opinion. My opinion advice that I'm telling you, you have to execute on the demo account. If you wish to execute these techniques on live account, it's your own, it's going to be on your own responsibility. Okay. Thank you, Mr. Ben. Thank you. All right. Now let's get ready for the bonus strategy. Who's ready? I want to hear. If you're awake, you didn't feel bored, you didn't fall asleep, just write here awake. Don't write ready. Just tell me awake. Great, great. Nice. Everyone's awake. That's nice. Thank you so much. This is a very easy to use trading strategy. It can be used on gold. It can be used on oil. It can be used on NASDAQ. It can be used on Bitcoin cryptocurrencies. This is the most easiest one. Okay. I'm going to make the template blank. Okay. Watch these steps. You know, there is a sandwich even available for maybe 10 dirhams, and there's a sandwich available for 100 dirhams as well. Well, maybe 500 dirhams. I think 1,000 dirhams too much, right? Okay. Now this is the secret sauce. Look at these steps. Control N, or you go up, insert indicators, go to oscillators and MACD. Take a screenshot. Take a screenshot. Take a screenshot. And this is good to trade on 1 minute or 5 minute time frame. If you're active trader, if you're someone who has time to trade and you can see the screens all the time, use a 1 minute chart. If you're someone who's busy, stay on a 5 minute chart. Click on MACD. These are the settings. This is the secret sauce, 55. This is 233. This is going to be yellow. Thickness will be maximum, third level, and this will be none. Take the screenshot. This is the most simplest and easiest trading strategy. Take the screenshot, Please, I'm going to count to 5. 1, 2, 3, 4, and 5. Now go to levels. Add a level here, 0 line. 0 line is the heart of this method. Hit the OK button and you will see the MACD indicator with your custom settings. Here, this is the most simplest, easiest trading strategy. You've got here a 0 line, okay? 0 line, this is the heart of this method. This is the heart of this strategy. When the MACD, these bars, the yellow bars that you're seeing, these are called histograms. These are called histogram bars. You know, these are histogram bars. When you see a fresh curl MACD going above the 0 line, the histogram bars are forming above the 0 line. This is an entry to buy. And if it goes below the 0 line, you exit the buy. This is a sign to short sell. Then this is, if it goes again, you buy and you hold that buy until an opposite curl happens. This is a trend trading strategy. When the markets are trending, they make decent kind of income. You can see here by itself on the chart, when it goes below the 0 line, this is an entry to short sell. And you can see here when it crossed from here, it went severely down, and you can hold it or you can take the profits manually. This is the simplest and most easiest way to trade. There are also advanced version. Thank you everyone so much for attending today's webinar. I hope you enjoyed. I hope you learned some valuable stuff. If you have any questions available for me, please feel free to ask me here. There is a section called reactions. You can raise your hand and I can even unmute you to have your questions over the microphone. And let's have some questions. Do you have any questions? Just contact our office and they will tell you what's the date of the next session. Sardar Jatsab is saying, when will be the next? Please contact our office to know more. Yes, Mr. Mubarak, I'm going to unmute you. Go ahead. Go ahead. You can come over the microphone.
Hi, dear. First of all, thank you so much. This is such a great, valuable section. We learned a lot of new things today. Thanks for that.
My pleasure.
Yes, the doubt is maybe out of syllabus. I just want to know, is there any way to find the broker is prime broker or sub broker, or even that, is there any other way to find where they keep our account in A book or B book? This kind of
No,
information can we
this
find?
kind of information is always confidential and held with the management. These are details. But let me
Okay.
tell you something. Let me tell you something.
At least prime broker or sub broker, can we able to find?
No, you cannot. But let me
Okay.
explain you something.
Okay.
It is the most important thing. It is that if the broker is A broker, B broker, CP market maker, the
Mhm.
main thing is the broker should be regulated.
Okay.
Because if you are trading properly, the broker is bound to give you your money.
Mhm.
Okay. And if you're getting washed out all the time, you're blowing your account, it means your risk management is wrong. You're using a heavy lot size. You're trying to put a Maruti engine in a Ferrari, which is not a Ferrari engine into Maruti, which is wrong. You know what I mean? Are you with me? Hello? Oh, you got me. All right. I'll unmute you again. Yes, Mr. Mubarak.
Yes, I got your point. I got your point. The blow of the account is purely because of us not managing
Yeah.
proper
So,
risk.
so trade small positions, small lots,
Okay.
learn to average them. And once you start trading with small lots, let's suppose if it's a $1,000, $3,000 account, stay with 0.01. Why you want to trade a full
Yes.
one lot or half lot?
Of course, we should not.
Yeah, but the thing is, people, they like suspense, they like thriller, they like action.
Okay.
Yeah.
Okay. I understood. Clear.
All right.
Okay.
All right. Any other question? Great. It was nice to have a question. See, when you ask a question through a proper answer, many doubts are cleared. Anybody else? Yes, Mr. Gupta. Mr. Rajat Gupta, go ahead, please.
I said, actually, I've tried contacting your office, but nobody reverted back after calling. I want to check, like, if I want to improve on my trading and do live trading understanding with your sessions and all. how it can be possible or something? Because these days can be on Zoom or something. For that
Can you please repeat? Your voice is cutting up. Can you please say again?
basically, I'm just looking more on live trading and understanding, so I can understand where I'm doing wrong on my trading there.
Okay, let me just tell you something. For example, you learned today a trading method and a trading strategy, and I'm recommending that if it's a $1,000 to $3,000 account, 0.01 lot size is the recommended or safest way to trade, right? Okay.
Yeah.
The trader by himself is responsible for the way he is executing the trades.
Yes.
I often personally claim that my methods are battle tested because I've been very long time in the industry, but I'm not allowed to say that because a financial brokerage is not allowed to give any advice or signals to their clients. So I am representing a sister company, which is an academy where I can teach and give trainings on the trading methods, right? But
Yes.
what you have to do, watch the recording of this video. There are other videos on available as well in recorded forms. You can get them from the company, which are done by me. See which method, which style, which technique you like the most, and practice that on demo fluently. Don't do something called strategy hopping. Strategy hopping means traders keeping on trading the different techniques. Let me tell everyone something. You know, the profits and losses are scattered in the market. They are there waiting for you. But sometimes there is a series of losses that comes, winners come later, but the winners should be always bigger. Should be that big that they will compensate your losses. So the problem is people take 5, 10 techniques and they give up. Don't do that. So my suggestion is learn this method. Or if you're a client already, if you have a trading account, just contact them, tell them I want one personal session, one-to-one with Mr. Mohsen from Kuwait, and they will even do a Zoom session for you. I'll help you out. Okay? Is it fair? Mr. Rajat Gupta. I've unmuted you, Mr. Gupta.
Yeah. Okay. Okay. Yes, please.
Any other questions?
That's it. Thank you very much.
All right. Thank you. Great. Any further questions? You see, I don't mind questions. I don't get upset by questions. When things are ethical, legitimate, and genuine, why be unconfident not to answer them? If I enter short sell, but that price goes up instead, what should I do? You follow your strategy, you follow the method. The losses and profits should happen according to the trading rules, strategy, and setup, not by your random decisions. Profits and losses are part of the business, they're part of the game, but your wins should be bigger than the losses. Go after this session, Mr. Awais Yunus, just do explore the chart and zoom out and browse it on a 1 minute chart, 5 minute chart. You will see and learn when the market is in trend, it gives more money, but when it's not trending, it does give you losses as well. These are high probability, high win rate trading setups, which means in the longer term, if you trade properly with small size, you should be successful. Yes, Mr. Awais. Sorry, I just saw you raised a hand. You can come over the microphone if you wish. Okay. Any other questions, everyone? Do you have any more questions? If I enter a short sell, but this is covered. Okay, great. All right, I think we're done. Any other questions? All right, let's wrap it up. Everyone, thank you so much. Okay, yeah, there's one more question. Yes, Mr. Gupta, please go ahead.
There is any method for scalping on the stocks also? Because I'm trying some strategy there, but it is not getting me.
You can use the same method. This one. You can use this method.
Okay.
Just try, but do the demo first.
And on 2 minutes or 5 minutes chart, I can try something.
Well, you can try 5 minutes chart.
Okay. Okay. Yes, please. Thank you. Thank you.
All right, everyone. Thank you so much. Let's have a great evening. Thank you for your participation. Thanks for your attendance. Please do give reference of this webinar in your feedback to our office, and you can visit our Dubai office branch. There are gifts waiting for you, and looking forward to see you in our next upcoming sessions. Have a great evening. Have a great week ahead. Had a great weekend ahead as well. This is Mahsin Khan, and bye for now.